Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Hey everybody, Coach D with TackleTrading.com. Thought I'd take a moment just to go over the chart of gold. Um, Interesting chart setup. We talked about it quite a bit yesterday in the coach's show. We like the general setup, and so we're going to talk about the current conditions of the chart pattern. What do you do when you have a nice looking bullish retracement like this, where you get a nice little pop up like that? You get a signal candle, and then the next day you see more downward action. Is this a failed setup, or is this simply require some more patience? Well, let's take a look at that and see what we can come up with. First of all, let's just back out and look at it in context. Let's start out with just the simple statement that, hey, it broke resistance, boom, ran up to a nice new high, and it's in a retracement. And, it could come down and find support. I honestly think it will find a higher support zone somewhere in here. But, it may not come until it comes all the way down to that 1300 number. It may come all the way down here before it tries to find some support or the buyers are willing to step up. That has yet to be seen. Where it's set up right now is in a pretty good little scenario here where you feel, you threw up a little trend line. And I'm just ballparking that. You're getting close to the buy zone. There's an old resistance neighborhood here that you could be considering a buy neighborhood. And, if we back this out into a weekly time frame, and just look at it from the bigger picture, this would be very early stages of a pullback, just barely starting down. You get a nice breakout on increased volume, and you're just starting to see a little bit of selling. And so again, the question is where is that support going to kick in, and will we see it give us another run or come back out and re-challenge that old resistance? Let's take, we know the dollar's getting beat up, and I probably expect the dollar to continue to drop, and so gold is a good safe haven in general. One of the things I like to do when I look at that daily chart setup is actually just look at it in context and just understand that, just because we have a downward candle today doesn't necessarily mean that that's a failed setup. First of all, look at the momentum on the candle. So you look at the bottom of the candle, and you can see the drop to the bottom of the next candle, and that's a pretty good sized drop. So that, we're measuring that, the size of that drop. And then over here we got that little signal candle come in, which is a smaller drop. And this last candle here, its bottom is even smaller still. Even though it's a big red candle, the bottom still came in a possible slowing momentum situation. And so what we need, of course, is that upward confirmation in price. So let's switch over into an intraday chart. And here we are on a 1 hour time frame. And of course, you can look at it on any intraday time frame, but you can see here that slowing momentum in a little bit better context. So let me again see it. Let's squeeze that in a little bit and kind of put that into a place where we can see it a little easier. Okay, so here is that slowing momentum we're talking about. That's the bottom of the first candle. And then we've got the bottom of subsequent candles coming in here. And here you can just kind of say, okay, bottom pattern, bottom, bottom, bottom. There's that bottom still. So here's the general slowing momentum pattern. Got a little bit of selling activity in there. And so we're watching that new little zone in there and watching an interesting phenomenon occur where what you have here is called oscillator divergence. So I just threw on an RSI. Just a typical oscillator. You could probably do this with any number of oscillators, a stochastics, even a MACD. Any sort of momentum-based indicator is going to show up. When you see that slowing momentum pattern, you will get oscillator divergence. Well, what is oscillator divergence? It is when the price action here is still going down, and it's establishing lower lows, lower highs, lower lows, lower highs, and a new lower low. It is establishing that lower low and lower high. But you'll notice that the RSI on here, as it registers that first support zone, it's well below that 30 line here. And it is, this time around, it came down, but it registers much higher. And so that creates a little oscillator divergence. And let me really bring that oscillator up so you can really see that pattern a little bit more clearly and erase that. So you can see that here, you can really see how well that registered. Again, the drop's kind of skewed now, but you can see just how much less that subsequent drop registered on, call it the Richter scale, if you will. Now that's what you would expect to see on a bottom or on a top when you have that slowing momentum pattern. That does not mean it's going to take off. That doesn't mean it's going to run. The context is right. The setup is right. Whether or not the buyers step in this week, or maybe they wait till next week, or maybe prices do end up dropping to a lower point, we might not see the support kick in until it gets to a bigger number like 1320, or again comes back all the way down to that known support resistance zone. This is where something like Fibonacci's can help, or moving averages can help, where you're looking for catalysts that would help buyers step up and jump in and start buying it and pushing prices higher, continuing that trend. And so we're still going to wait for confirmation. And as you're looking for that confirmation, one of the tricks and tips of the trade here is for you is going to be to change time frames. You're going to drop it down into a smaller time frame, 30 minutes to an hour. You can go even 15 minutes. No need to go down below that, because that you're not necessarily day trading as much as you are looking for a swing trade here. And we're just going to look for confirmation. So as of right now, I'd like to see this set up with a pattern that's a little easier to time your entry in on here, because right now the current resistance zone is still up here, and you want that kind of confirmation for it to take out a pivot. So if, for example, we see maybe a smaller rally in here and another higher low, I would look to lower my entry to the lower resistance point and look to capture whatever reversal pattern forms in here, assuming that one does form. If it doesn't form here and it continues dropping, we'll watch for it to set up down at the lower price point and look for that reversal pattern as well. So again, when you have a good technical setup on the daily chart and you're trying to time that entry, and if you're going with a directional trade, you want that confirmation. Now, if you're not looking for that directional confirmation, you're just saying, I think I like gold in general and I want to do something more passive, income oriented, less directional. Maybe I just sell a 1300, put or something like that, or on the ETF or something along those lines. Maybe sell a naked put or a bull put credit spread that doesn't necessarily require the upward confirmation and timing to kick in. If I'm going to go for that directional play, though, it's best to wait for your confirmation and get a signal that it's the time to buy. Coach D, tackletrading.com. Hope you found this helpful.